Okay, time to get started. Right, I'll just give you a quick introduction. So first of all, thank you all for coming today. I will leave the disclaimer up while I'm just introducing Brett, so please read the disclaimer on your screen. So today I'm excited to present somebody that I've been following personally trading since 2005 when I picked up his book, A Trader's Guide to Self-Discipline. So it's no exaggeration to say that Brett is one of the higher profile kind of celebrities in the trading world. And right now, I'm a bit like a teenage girl hanging outside a concert venue playing and kind of actually getting a glimpse of her idol. So Brett's been actively involved in the financial markets since the 70s, and he's got extensive experience working in the professional trading industry, far too long to list. He coaches trades in hedge funds, prop firms, and investment banks, and he has an interest, overall in performance enhancement among traders, drawing upon his research from expert performers in various fields. Now, for those that haven't seen it, I'll just bring you up a picture of Brett and his blog. There's a blog called Trader Feed. If you haven't seen it, it's probably I don't like to say the oldest, but it is the oldest. It's definitely the most famous, comprehensive blog on trading psychology. It's updated. It's still updated now. He's been writing that since 2005. It's the most comprehensive blog on trading psychology anywhere. Brett's authored numerous books on trading psychology, and he's also regularly contributed to Forbes. Now, what I'll do is I'll take the questions and pass them on to Brett at the end because he's on the phone. So feel free to add them as you go. So with that, I'll hand over to Brett. Thank you very much, Brett. And please take it away.
Okay, thank you very much, and thank you for reminding me how old I am. It's been a wonderful ride, and I've learned a lot in many years of working with traders. Right now, I'm working with a number of different trading firms, prop firms, hedge funds. And you get to see people in different strategies and very skilled people. You get to see beginners. You see what makes them successful. You see what trips them up. And there's a lot of learning there and a lot that we can learn to help our trading performance. So I appreciate the invitation and the opportunity to speak with everyone. So what we're going to be talking about today is 3 powerful techniques for changing your trading psychology. And these are 3 techniques, very practical activities that you can take away to help your trading, whether you are a relative beginner or someone more advanced in markets. Before we launch into those 3 techniques, let me make some preliminary observations. When we get down to it, there are really 2 fundamental sources of edge in trading. The first one I call pattern recognition, the ability to detect, read, and act upon patterns as they emerge in real time. And the second I call analytics, the ability to use research to uncover stable relationships among predictors of market outcomes. Now, in pattern recognition, we have people who are operating broadly and quickly. They see many different things at one time and they put it together, they read the pattern, they act upon it. Analytics is a deeper, slower process of researching, finding out something that's predictive and using that to build models, perhaps, and using that to guide trading decisions. And that's really what Daniel Kahneman talks about when he writes about thinking fast and thinking slow. These are 2 different parts of the brain. One acts quickly on information that's processed. One is more reflective and analytic. Now, here's the key. Really successful traders, and what I mean by a successful trader is someone who is able to sustain a living from their trading. Really successful traders are gifted in at least one of those areas. They're either gifted in pattern recognition or they're gifted in terms of their research analytics capabilities. Now, I purposely use the term gifted Because in trading, as in other performance activities, being competent is not enough. In other words, in some areas of life, I can be competent and I can make a living. I can be a competent teacher and I can make a living as a teacher. I can be a competent manager and manage a store and I can make a living. But in performance activities, competence is not enough. If I'm a competent basketball player, I can play in the weekend leagues, but I'm not going to make the NBA. If I'm a competent golfer, I'm not going to succeed on the PGA Tour. If I'm a competent trader, I may not lose money, but I'm not going to make a good living from it. We need to be gifted in some area of performance in order to be an elite performer. So the question becomes, where are we gifted? In our fast thinking, our pattern recognition, in our research capabilities, or maybe you're gifted in areas that are separate from trading, and maybe trading is going to be a side activity for you, but not necessarily how you find your fortune. What I found working with trading firms is that the structure of the learning process, how people go about learning trading, is intimately connected with their eventual success. Because the learning process, when it is structured properly, builds on people's gifts. It builds on people's strengths. When traders don't succeed, they learn in a more or less haphazard way. When the learning is structured, when the learning is guided by mentoring, the odds of success go up considerably, because then we start with the gifts, we start with the talents, and we build skills. And it's that combination of skills and talents, what we learn and what's inborn, that creates elite performance. Now, many of you affiliated with Jigsaw Trading are familiar with order flow. That's the kind of trading that I was first involved in my work in Chicago. And that is pattern recognition at its finest, because you're recognizing in real time the activities of buyers and sellers, who is dominating, where is selling drying up, where is buying drying up, where are sellers and buyers being aggressive. And you're able to recognize that and get a feel for that in real time so that you can make quick trading decisions. That's the essence of pattern recognition. And we can practice that, learn that in multiple ways, and develop those as skills. What the research tells us is that when we learn in multiple modalities, we're most likely to learn deeply and permanently. What does that mean? Multiple modalities. When we see it, when we hear it, when we talk it, when we write it, when we are involved in multiple modes of information processing, we are most likely to learn well. And so to see something on the screen, to review it, to talk it out loud with a peer trader, to write it down as part of a journal, all of these are potential multiple modes that can guide our skill development and build upon our gifts. And I'll be happy to answer questions about that learning process in our Q&A. I'm happy to see that for the next webinar, you've got Alex Haywood and talking about the trader development process at Axia Futures. They do some good work on developing traders, and so you'll learn more about that learning process. So let's go into 3 techniques to help your trading. The first technique I call immersion, being immersed in what you're doing. Now, this is a point of view you're probably not going to come across in trading psychology too often. was interesting. Just yesterday, I was at a concert with my wife, and there was a jazz ensemble playing, and they were doing improvisational jazz. And it was really interesting seeing them doing the improv, because they were so focused, so immersed in what they were doing, and so attuned to each other that each person in the group was innovating, was doing some interesting things, and they were all playing off each other. Now think about the rapid coordination and pattern recognition that needs to happen when you're improvising a jazz piece. That's exactly the process of what frequent traders are doing. Traders who are operating quickly in the markets, they are in that improv mode. They're highly focused on what the market is doing, highly focused on incoming information. They're processing that, immersing themselves in that, able to see patterns and able to act quickly on those patterns. In that state, it's all focus, no self-talk. Can you imagine in jazz improvisation if the drummer was saying, I'm wondering what I'm wondering what he's going to play next, or I wonder if he's going to slow down, or I hope I don't miss the next change of beat. As soon as he's thinking that, he misses something. It's the absence of self-talk, complete immersion in what one is doing. Now, here's the key idea. Many traders fail, not because of psychological problems per se, but they fail because they have not sufficiently developed their concentration muscles. They have not learned to sustain focused immersion over time. Their concentration muscles get tired, they lose their focus, their mind wanders, they start to think about other things, they get distracted, emotional interferences creep in, and that's what disrupts their trading, because they're like the distracted jazz musician. They no longer are in the flow. Many traders fail, not because they have emotional problems, but because they can't sustain the flow state. So technique number one is immersing yourself and building your concentration muscles. It's really the cognitive side of psychology, not the emotional side. Now, one technique that I talk about in my first book is listening fully immersed with headphones on, high quality headphones, and listening to complex music and the different instruments that are playing in the complex music and the different changes of key and tone, and immersing myself in the music and just listening for each instrument. No thinking involved, just tracking each instrument, tracking each change in the music. And the music I used for that was Philip Glass's Music in 12 Parts. If you go to YouTube and type in Philip Glass, Music in 12 Parts, Part 1, you will hear a hypnotic kind of music. And I use that to immerse myself. And I would do these experiments for an hour or so. I mean, real immersion, not just a few minutes. And I learned to stay completely focused on the music and its shifts and get into a zone that was unlike anything that I would normally enter into during day-to-day life. And what was interesting was once I was in that zone, there was no self-talk, no worrying about anything, no getting excited about anything. It was pure concentration. I think we can accomplish the same thing through meditation work. There are some forms of biofeedback where we learn to control our body's level of response, heart rate variability biofeedback. I think these are all different ways of immersing ourselves. But if you think about going to the gym, so to speak, and building your concentration muscles and learning over time to get better and better at sustaining your focus. That is hugely helpful to short-term trading. Every single short-term trader I've worked with who has been outstandingly successful, what does that mean? Making $1 million or more a year. Every single one has had real gifts in terms of cognitive focus. So this is a great area for personal development. And I think it helps in other areas of life as well. Technique number 2, I've written about on the Trader Feed blog. You can also read some about it in my book, The Daily Trading Coach. And this is emotional reprogramming, how to reprogram ourselves emotionally. It turns out in the research outcome literature in psychology, these are some of the most powerful techniques for changing our emotional patterns. Here's how to do those. First, you start out by teaching yourself a basic relaxation exercise, and you practice it and you get good at it. The basic relaxation exercise is that you seat yourself in a comfortable position, keep yourself physically very still. You deepen and slow down your breathing. So you're breathing very regularly, not in a forced way, breathing very regularly, but deeply and slowly. And while you're breathing deeply and slowly, you have your eyes closed, and you just focus on something peaceful, or you could focus on some peaceful music. But you're just training yourself to be calm and focused. Now, once you get good at that relaxation exercise, you then add the reprogramming components. What you do is you imagine the stressful situations that trigger your worst trading decisions. So let's say you have the FOMO situation. You have a fear of missing out on certain ideas or trades, and that triggers you, and it gets you acting and putting on trades that you really don't want to have. So you end up over trading. Well, to combat the FOMO, you have to work on the emotional trigger. And the emotional trigger, the F in FOMO, is fear. So something's triggering your fear. So while you're doing your deep breathing and you're keeping yourself very calm, you get yourself in a slowed down state, you then do a mental rehearsal, a visualization, a vivid visualization of actually missing something in a trade. You actually miss a trade. You have a certain level you want to get in, and the market just moves right away from that level without you. And this is key now, you vividly imagine the frustration. You vividly imagine how you feel, wanting to get into the market, wanting to chase it, wanting to take a revenge trade. You imagine all those thoughts, you imagine all those feelings. So you're literally recreating the very stress and the very stressful emotions that you're wanting to change. And then, and this is the key part, while you're still breathing deeply and slowly, you vividly imagine how you want to talk to yourself in that stressful situation. You vividly imagine how you want to behave in that situation. So you imagine calming yourself down, talking to yourself in a realistic way. There will be plenty of opportunities. And so what you're doing is normalizing the situation until you bring yourself back down to that relaxed state. Now, what's happening there is that you're training your mind and your body to stay calm even when you are visualizing stressful situations. And if you do that again and again and again and again, you begin to habituate to those stressful situations. Those stressful situations no longer feel so stressful. They become familiar to you. You are mentally rehearsing the right responses to those stressful situations. And by practicing again and again and again before you start trading, you're able then to sustain that focused, relaxed state when those situations actually happen in your trading. So that if you do miss out on opportunities, and we all do, you're able to take some deep breaths, remind yourself of how you talk to yourself in the exercise, calm yourself down, get back into your zone. The time to do self-talk in trading is when you leave your zone. The constructive self-talk helps you calm down, and then you refocus using your immersion techniques. So what we're doing is a desensitization of the triggers. Most emotional patterns of trading are triggered by something we find frustrating. It may be triggered by a state of boredom or a state of overconfidence, but we're rehearsing that trigger while we're focused and relaxed until it no longer triggers us. Okay, and technique number 3. So we have immersion, we have emotional reprogramming. Technique number 3 is gratitude. And let me explain what I mean by that. This is probably the number 1 technique that's been effective for me, not only in my trading, but in other parts of my life. Our job as developing traders is to learn. We're always in the process of learning because markets are always changing. And so when we make mistakes, when things go wrong in trading, those provide the lessons through which we can learn. Now, if we look at our losses, if we look at our mistakes as lessons, it changes how we respond to them. Let's say we were very, very interested in learning mathematics, and our teacher gives us a sheet of paper with some problems on it, and we solve those problems, and we want to learn even more, and the teacher gives us another sheet of problems, and what do we say to the teacher? Teacher gives us a new sheet of problems, and we say, thank you. The teacher's giving us an opportunity to learn. We don't get the sheet of paper and say, oh, more problems. I can't deal with all these problems. No, we want to learn. Imagine bringing that sensibility to trading. We're here to learn. And we're going to make mistakes. Even the best traders have a hit rate not that far north of 50%. Losing is part of the game, but we can learn from it. Once you accept your losses, as long as we have good risk management, once you accept your losses as learning tools, you can respond with gratitude. You can say, thank you, teacher, for this next lesson. Thank you for the opportunity to learn. And in fact, teams that I work with will review the mistakes of the day so that there's a mutual learning. And so now they are feeding each other. The losses become positive learning experiences for a number of people. When you approach setbacks in life as learning opportunities, suddenly frustration goes away. We know from the research in positive psychology that positive emotional experience broadens our perception. We're able to see more. We're less tunnel visioned. It leads to greater productivity. We get more work done. And it leads to higher creativity. We just generate better ideas when we are in a positive state of mind. And so by working on gratitude, looking at setbacks in trading, but really it's setbacks in any area of life, as an opportunity to learn something and expand ourselves, we sustain a positive mindset that will help us for future trading, that will help us for future life. This mistake that I have just made is here for a reason. I meant to learn from it. Thank you. Let's get through this lesson. That's the thought process. And if you can do it within teams, if you can do it with colleagues, then it becomes even more powerful. So these are 3 techniques that I have seen used in very successful ways, and that I think can turn our trading around significantly. One of the big takeaways is that in terms of psychology, developing ourselves cognitively, becoming better and better at processing information is every bit as important as working on our emotional game. Emotions can interfere with our trading and can ruin our trading, but emotional control by itself will not make us good traders. Good traders are gifted in how they process information. And that part of psychology is every bit as important as working on the emotional game. Well, I have purposely left roughly half of the time for questions and answers and observations. If people have situations that they're working on, I invite them to throw them my way, and either I'll be able to come up with a strategy to help you with your situation, or I'll be able to point you to resources that might be useful for you.
Okay, hi Brett, thank you for that. Very interesting. You can hear me okay?
Yes, I can.
Good. I'm going to read one of the questions. It's just a personal experience from somebody. So Charalampos, I think that might be a Greek name. So hello, let me explain about myself first. I tried this from university, lost 3 accounts in the beginning, made some with a disciplined manner on my 4th account, then traded 300,000 for an investor. Did well for 6 months with some difficult situations that I managed to solve. At the end, lost almost half in one day over leveraging myself, fighting the trend, which has happened to many. I'm back trading, but a different way. I found out there's a way to trade without having emotional pressure, and it's the second time I'm testing this and second time I've had good results. What I want to have is a real conversation with some of you, including Mr. Brett, where I can share what I learned about without emotions. Not going deep into why, I want to ask others why it works for me and to maybe understand the concept better. So over to you, Brett, if that's okay.
Yes, and certainly if you look at books like the Market Wizards series from Jack Schwager, many successful traders began with big losses. And part of what made them successful was turning their trading around, turning themselves around after those losses. But again, let's get back to the basic point. Trading is a performance activity. What do we know about performance activities? It takes considerable learning to develop expertise. It takes considerable practice to reach elite performance. So if we come out of university and we start trading, or we read some trading books, or we hear some things and we start trading and we put real money at risk, well, would you really do that in any other performance activity? Can you imagine someone gets it in their mind they want to be a doctor, and so they decide they'll give surgery a whirl? Well, I would not want to be their patient. Or could you imagine any athletic sport? Typically, it takes years of development. Think about acting, singing, think about artwork. Typically, it takes a significant period of development of skill before someone is competent enough to have some level of success. On a recent blog post on my Trader Feed blog, I took a look at what that learning curve looks like. And typically, even for quite successful traders, it's 18 months to 2 years. And that's with good mentoring. That's a significant period of time. But when you think about other performance activities, it's not so unusual. How long would it take to become a really good chess player? It would take considerable, 18 months, 2 years would not be so unusual. So I think part of the problem emotionally is that we try to trade before we've developed the skills, before we've developed the expertise, and then we lose significant money and we go through frustrations. By being realistic about the learning curve and by working that learning curve in gradual ways, we can develop the skills without traumatizing ourselves and without having all the emotional upheaval.
All right, thank you, Brett. I've got another one. This is a good one. Slightly different topic. We have Daniel. He's a German-based trader. He's read the Daily Trading Coach and he's currently reading Trading Psychology 2.0. He says, cool. I participate in a bigger learning group where we're taught to start learning in simulation and to switch one day to live trading. I've done simulation for 18 months, and since November 2017, I switched to live trading. I achieved stable results under simulation, but as I switched, my results suddenly got much worse. Now, reading the Daily Trading Coach, chapter 3, if I'm not mistaken, I saw myself depicted as you described performance fears. So his question is, do you think to stay so long in simulation until stable results are achieved and then switch to live is really a good trading method or a good learning method?
Yeah, I think it helps to make as many of our mistakes as possible in simulation. If people can't be consistently profitable in simulation mode, I don't see any way that they're going to do it with live trading. But the questioner is absolutely correct. Because you can do something in simulation, does that mean you can immediately put it into practice in real trading with real money at risk? And the answer is no. There are other psychological forces at work that and pressures and performance anxieties at work that can interfere with our performance. And so making the transition from simulation mode to live trading is really important. And one of the important ways of doing that is by starting the live trading small enough so that the P&L really doesn't matter initially. You just want to have that feel of having real money on the line. And you want to become consistent in your trading with a very small size before then ramping up to larger sizes. So the way that I describe the developmental process of trading is that first you get better. Getting better means getting more consistent in your trading and more consistent in your profitability. And typically we know someone's getting better when they have more winning trades than losing trades, and especially when the average size of their winning trades is larger than the average size of their losing trades. So first they get better, then they get bigger. So once you have the consistency, then you build that up step by step by step. You don't triple your size all at once. You move in gradual increments, but steadily, and get consistent at the new level of risk taking, of trade sizing. Get consistent there, and then you get bigger still, and get consistent there, get bigger still. So it's kind of like a stair-step pattern. So you get better, you get bigger, and then the third step developmentally is getting broader, which means you find multiple sources of edge, multiple ways that you develop of making money in markets. Because when you have multiple edges, you are diversified. And when some things are working, other things may not be. And so you have a smoother equity curve over time. So I think by starting gradually, working on the consistency and gradually building the size, we can avoid many of the performance pressures.
Thank you, Brett. Right, so we've got a lot of questions coming in. We won't be able to cover all the questions, but I'm going to try and cover the ones that are more about personal experience. Jason's got a great one. He seems to get his account at all-time highs. Then he gets overconfident and finds himself at an all-time yearly low. And he can dig himself out of the holes. So his skill's not a problem, but he can't stay on top. So for Jason, he's saying he's starting to believe it's just as hard to stay on top as it is to dig yourself out of a hole.
Yeah, what a great observation here. And I've met with very successful traders who have this pattern. And what happens, and Jason's pointing it out very accurately, is that we become overconfident. We become biased in our decision-making based on the overconfidence. And I've seen this in my own trading. I joke about it. I'll do some research and I'll find something that looks really good as an edge. And I'll trade it and it makes money. And I'll trade it again, it makes money. And at some point, I think to myself, I think I've got this market thing figured out. Well, as soon as I think that, the largest losses are going to come. And sure enough, they do. Because subtly, we then change our decision-making process. We change how we manage positions. And we get away from the very things that made us successful. And so the exercise that I have people do is actually working on making money and having a string of winning trades as a risk factor, as one of those triggers that we were talking about when we're talking about emotional reprogramming. Now, usually we think about making money as a good thing. You have a string of winning trades, that's a good thing. But no, it's a risk factor. It's a risk factor for overconfidence. And so you want to do the desensitization exercise I mentioned, where you slow down your breathing, you do the relaxation work, and you imagine making money, and you imagine the feeling of confidence, the feeling of overconfidence, and how you talk to yourself when you're overconfident. And you then imagine bringing yourself back down and trading as if it's January 1 and your P&L is 0. And you imagine what that feels like, and you ask yourself, would I put on this next trade if my P&L were at 0? So what you're doing is you're emotionally regulating yourself by looking at the overconfidence, by looking at making money as a risk, just like FOMO is a risk. Once we make that mind shift, then we can be on the lookout for it, adjust ourselves, and avoid the overconfidence bias.
Thanks, Brett. Right, we've got a number of questions. I'm just going to go over a couple of questions.
Good.
They're kind of similar area. One is, do you recommend building focus immersion, particularly when order flow trading, by increasing the amount of one's live trading time in incremental amounts, or is that a flawed approach? And then somebody also asking about, do you cover immersion and emotional programming in the Daily Trading Coach or one of your other books? If you could.
Yeah. Okay. Yes. I do talk about focus. I don't talk so much about specific techniques other than biofeedback. And so the sections in Daily Trading Coach about biofeedback are relevant. And if you Google trader feed and focus, so just put in trader feed, TRADERFEED, that's one word, and then the word focus, you'll also see some blog posts on the topic. And so that'll point you to some resources that way. But the questioner is asking a very good question. We can build our trading muscles and our focus muscles by extending the period of time in which we are fully immersed in the market. And so if we're doing order flow trading, we may start out by only trading certain hours or a certain period of the day when order flow makes sense to us, when institutions are most active, let's say. And then gradually we expand that amount of time as we find ourselves able to sustain the flow state. When you are in a real flow state, it feels quite different than our normal everyday state of consciousness. For me, I get a real quiet feeling in my head, sort of a detached feeling, and it's like being in a zone. And when I'm in that state, I can be sensitive to information in ways that I can't when I'm ordinarily distracted. It's interesting, when I work with people in psychology, if I'm doing counseling or therapy, I will be zoned in on not only what they're saying, but how they are saying it. I'll hear changes in their tone of voice, changes in their rate of speaking, how their body postures shift, their body language. And I'll be processing all this in real time, very focused on that person. And I'll be able to recognize when their state is shifting, when they are moving from one mood to another, and that tells me something about the topic they're talking about and what that means to them. And I'm able to, quote unquote, get inside their head so much better because I'm so focused on them. It's the same thing that we do with markets. If I were distracted and thinking about how good a psychologist I am, or is this person going to get better, or, yeah, I would be a terrible psychologist. I would not be able to empathize with them. It helps to think about our interactions with markets as conversations. The markets are talking to us. We respond back with our actions. And so if you're really going to understand someone in a conversation, you have to be really zoned in on them, really focused on not only what they're saying, but how they're saying it. That's the kind of focus we have toward order flow.
Thanks, Brett. Right, so there's a couple of questions, a number of questions, and I'm going to add my own little bit to this, is a lot of questions about scaling up and how to handle increase in size. And what I'd like to add to that, if you've got any comments on the difference between when it's your money and when it's somebody else's money, and also whether you think people would naturally, if it's natural to have any kind of ceiling to how much size you could get up to personally.
Yeah, obviously the more size, the greater variability of P&L, and depending on your account size, even if you have an edge, there could be risk of ruin if you size too large. So absolutely, there are some ceilings on size, and there can be ceilings on size depending on the liquidity conditions of the markets we're trading. So those are relevant considerations. I think as soon as we focus on sizing up positions, we're in the wrong place. I think if, yeah, I was joking the other day at one of the trading firms. I work with the traders at SMB, Kirshner Trading, and they were working on sizing up their trading. And they have a team structure, they have mentoring, it's really good, but they were really focused on sizing up. And I asked them, suppose you were in your sexual performance, suppose you were really focused on sizing up, getting as big as you could, and you kept telling yourself, I got to get bigger, I got to get bigger. What's going to happen to your sexual performance? And of course, the young men in the room all recognize that would not exactly enhance their experience. The point being that by pushing trading size, we create performance pressures. Performance anxiety occurs when we're more focused on the outcome of the performance than the doing of the performance. And by focusing too much on sizing, we can focus on outcome and really lose that immersed focus on the doing. So I like it when traders gradually bump up their size, get consistent at the new size, make sure the new size doesn't feel very different, Then after they get consistent, bump it up to the next size, and then get consistent, bump it up to the next size. That's what you do in the gym, you know, when you're working out with weights. You know, you lift 150 pounds, you can do 3 reps really well. Fine, you go to 160 pounds, you go to 170 pounds. You gradually bump up your size and increase your strength. So you want to make it a gradual process. You don't want it to be disruptive in any way. And if you're having trouble getting consistent at one size, you don't keep bumping it up. That makes it a more organic process that doesn't get into performance anxiety and performance pressure.
I've got some things I'm going to go and take to my wife after this meeting there, Brett.
There you go. Yeah.
Absolutely. I told her it wasn't important. Right. There's a couple
right.
of
Exactly.
Right. There's a couple of people that are asking, you know, how to find a style. You know, we talk about different styles and we're order flow, and there's a lot of other styles of trade. How do people find their own trading style?
That's a great question, and it's such an important topic, an important question. You know, I teach in a medical school, and in medical education, the third-year medical students do what are called rotations, and they spend 6 weeks or 12 weeks in the different specialty areas of medicine. So they'll spend 12 weeks, let's say, in family medicine. They'll spend, you know, maybe 6 weeks doing surgery, and they'll spend 6 weeks doing, you know, pediatrics. But they'll try out all these different areas. And the real purpose of that is to see what speaks to them, to see where their passions lie, what makes sense to them, and to see what they're really good at. And it's not uncommon that certain areas a person might really love, and another area a person might say, this is not for me. It'd be unusual for someone to have an equal interest and feel for psychiatry on one end and surgery at the other end. And so that's the analogy I would use with trading styles, that you really want to have that time in simulation mode to try different styles. From the very short-term trading to swing trading during the day, still intraday swing trading, to trading over multiple days, and possibly a longer-term trading toward investing. I mentioned I work with the folks at SMB that some of the people are doing options trades that last for weeks and weeks, and they're recycling those month by month. And so it's not daily in and out of the market. And some people do very, very well with that, but you don't really know until you try it out. In general, the more you're gifted at pattern recognition and that fast type of thinking, the more you're likely to scalp and trade on very short time frames. Some of the traders I've worked with who are most successful at that type of trading have also been very good at video gaming. It's the same kind of fast reaction time, fast pattern recognition skill. The more that you are analytical in your gifts and you really think through what's happening and why it's happening, the more likely it is that you'll find your advantages at longer time frames. So you want to experiment. But what makes sense to you, what feels right to you, what you seem to be good at, that gives you really valuable information about the paths you're meant to pursue.
Thanks, Brett. We've got a very interesting one here. G Trader, his name. How do you get out of the immersion or tunnel vision directional bias? You know, the kind of bias you can get into sometimes as an intraday trader, you can sometimes kind of get hooked on a bias and it's kind of really not working for you, and you have to kind of bring yourself back to what's happening here and now. How do you recommend somebody, you know, to actually does that within a trading day?
Yes. You know, you want all of your ideas to be hypotheses and not conclusions. You want to rehearse that mindset. When you're doing that immersion work, you're really practicing having what people in Zen, in meditation, call an empty mind. You're really opening your mind. You're not rehearsing a mental bias, that's for sure. So when you are working on that immersion, you really are working on clearing your mind and being very open-minded so that many different hypotheses can come into your head. And your job going forward, as you're following the market in this very focused state, is to see which of those hypotheses seems to be playing out and which ones aren't. So you're not starting with an idea and then putting on the trade based on your conclusion. You are starting with basic observations about order flow, basic observations about how different things are trading relative to one another, and then developing your idea from that. But the idea is a pattern that you recognize. It's not an explicit conclusion. So the question here for the person who brought this issue up, the question is, are you bringing the idea to the trade, or is the market presenting you with the idea in the pattern that's setting up? If you're bringing your bias, your idea to the market, you're forcing something. The really good trades in terms of pattern recognition are the ones that come to you. The pattern sets up, you recognize things lining up, and a light bulb goes off in your head. That's the opposite of bias trading.
Thanks, Brett. Have you noticed any correlations between the amount of time a trader spends in the market and how profitable they are or even aren't?
Good question. Yeah, so it depends on the trading style, and the people who are active traders, actively trading throughout the day, like day traders, definitely having more time in the market does give them potentially more practice. And so they are typically actively involved through the day. Actively involved does not necessarily mean actively trading at every time of day, but they're actively processing information all day. And we know that just in terms of the development of expertise, the more practice we have, the more likely we are to develop skills. So for instance, in Chicago, we had traders not only who followed the market intensely each day and traded actively during the day, they video recorded the market sessions and would review, after the close, they would review the market moment by moment and see how the market action unfolded and see what decisions they made and how they could have made them better, so that they were creating multiple practice sessions out of a single day's trading. And those traders developed much quicker than the ones who didn't do that active review. So the more practice, the better. But a lot of it, again, depends on how you structure the practice. And I found that when it's structured with teams, when it's structured with other people, when it's structured with multiple ways of processing the information, as we talked about, we're most likely to get the practice benefit from our trading experience. The quality of the practice time, review time outside of trading hours definitely, in my experience, correlates with the growth process of the trader. And that's why I sometimes have said we can gauge the potential of a trader by the quality of the time they spend outside of market hours. That's when a lot of the review, a lot of the learning takes place.
Fantastic. Right. This is an interesting question. I'm going to add on my own bit to this as well. You say that one needs to be gifted to be successful. Now, he's saying, say my cognitive skills are not world-class. I know this guy, he's underestimating himself, but my expert in math and programming to implement better synthetic order types than what is usually available. Could that be an edge in your experience? I'll add on to that. as well. How much does confidence and actual belief in whether you're good or not play into this?
Yeah, so if you're not gifted and you have a high degree of confidence, that's the definition of delusion, right? Yeah, I've met a lot of confident traders who go broke because they really haven't developed concrete skills and they haven't really built on specific strengths. When I say gifted, I mean someone who has a distinctive ability to process information in a certain way to develop insight. And there are many different ways we process information. And so an artist may be very gifted in their visual perception. They can see something in a scene that I would never see, and they capture that in a painting. There's something about their perceptual process that is enhanced. They have a gift for seeing the detail and the nuances of things that I would never have. And similarly, with the person who can make these rapid decisions, I personally could not do that. I don't have that speed of mental processing to be able to scalp in and out all day long. That takes an unusual amount of concentration, but also an unusual ability to process information quickly. So the question is, what do we do well and what do we gravitate to? Because we tend to gravitate toward our strengths. So what is it that you love doing? I think that's why some of those fast traders have done well with video gaming. They just gravitate toward that way of processing information. Same way with quants, they have those analytical skills. And so even when they weren't involved in markets, they were doing math and they were analyzing other things. That's just who they are as people, how they're wired. So that's what I mean by gift, is identifying how you are wired, how you process information at your best, and leveraging that in making decisions as a trader. There's one portfolio manager I work with who is just very interpersonally oriented. He knows everyone, talks to everyone, he's got a great personality, and he talks on the phone all day long to people on the sell side and people on the buy side about what they're thinking about markets. And he develops these ideas based on what he hears in conversations. And he can figure out which way traders are leaning and when they're leaning the wrong way. And he develops his ideas, and he's had a successful career for years and years and years because he's processing information by his strengths. He's using his interpersonal skills. So they're all different sources of cognitive edge that we can have. The real question is, what works for you?
Excellent. Have you got time for a couple more, Brett? I know we're at an hour already.
Yes, I'll need to get running, but yes, I have time for a couple more.
Just a couple of quick ones. There's a lot of people that have said, you know, that pattern recognition skills, we've all got them because we can all read and write and speak. And just asked if there's any way to actually improve your pattern recognition skills.
Yes, there are. And you know, some people definitely have more of those skills than other people. One of the interesting areas, and I think you're probably sensitive to this, is that how we process information is dependent partly upon how the information is displayed to us, how it's presented to us. So for instance, because I have some of those analytical abilities, I can look at information in a spreadsheet and I can make a lot more sense out of it than if I saw that same information on a bar chart. I just think more like a spreadsheet thinks, so to speak, than a chart thinks. Now, obviously, there are people with visual strengths who are just the opposite. And so when we develop ourselves as pattern recognizers, one of the interesting things to think about is, how are we taking information in? How are our screens laid out? How many screens do we have? Are we distracted? Is the information displayed in a way that is user-friendly for us? Like the portfolio manager I talked about, do we process information well by talking it out loud? Do we process well by writing? So those are all ways of increasing our pattern recognition, figuring out how the information best comes to us and how we can best make sense of it. And very, very often, changing how the information comes to us can revolutionize how we process that information.
Thanks, Brett. The last one, and I'm sure it's not a long one for you. You know how what it's like, especially in the retail world. There are some people who they treat trading like a passion. They eat trading, think trading, sleep trading. And then you've got other people like Domi here. He treats trading as a business. He goes in, he does it, he takes his trades, he goes home, and he forgets about it. What's your kind of point of view on those two schools, those two types of people?
Yeah, I worked with a trader in Chicago who would sit there in the morning, a session, and would wait until a pattern set up, put on big size, I mean really big size. It would move, the market would move his way. He would quickly scale out, and that would be his profit for the day, and he'd go home. And he did that every single day. He got very good at golf. He really enjoyed trading, but it wasn't about, quote unquote, having a passion for trading. What he had a passion for is being successful. The problem with having a quote unquote passion for trading is that it's easy for that to become not only important, but all important to us. And that puts emotional pressure on us. As I've said in a couple of my books, we're best off if we are diversified in our emotional portfolios, if we have many things that we're passionate about, many things that we love. And so if I'm passionate about my marriage, if I'm passionate about my 5 children and 6 grandchildren, if I'm passionate about my rescue cats, if I'm passionate about learning and teaching, and if I'm passionate about trading, I've got many, many different sources of gratification and well-being in my life. And if any one doesn't work out, there's many others that can sustain me. If I put all of my self-esteem eggs in one basket, if trading means everything to me, everyone goes through drawdowns, everyone goes through ups and downs, and that's a pretty vulnerable place to be, and it hurts trading performance. So I love to see people who have very full lives, passionate lives in many different areas. I love to see people who have things in their lives that are more important to them than trading, because they are going to have the emotional balance to get through the ups and downs of financial markets.
Thank you, Brett. That's all the questions now. I'd like to say a real big thank you. I mean, it's just great to be in a position to be able to do a webinar with you, to be honest. So quite honoured by that. But it's really great information. I know you can't see the chat boxes, but there's just been loads of people saying thank you. Great webinar.
Oh, good. Well, thank you for having me. I appreciate it. If you go to the Trader Feed blog, you can find my contact information there. And so if you have a question we didn't get to, please, I can't do online coaching, but if you have a question about the presentation that we didn't get to, please feel free to send me an email, and I will be very good in responding to you quickly.
Excellent. Thanks, Brett. And for everybody, the links up there, traderfeed.blogspot.com. And thanks all for coming. And once again, thank you, Brett. And I'll close the webinar now.
Okay. Thank you so much. Appreciate it. Good luck to you. Bye-bye.